inflation is causing acrimony between the private sector and public officials around the world. For instance, in the United States, in May and July of this year, the world's second richest person, Jeff Bezos, clashed with the White House repeatedly over inflation, which is at a 40-year high in the United States. In the UK, with inflation also at a 40-year high, last week, UK Business Secretary Kwasi Kwarteng criticized the Bank of England's approach to curbing inflation. Here's what he said.
It's a strong one to say that inflation was an issue that was identified at the beginning of last year. And in fact, I think people, Bank of England commentators, even people in the Treasury were saying that this was an issue. And the job of the bank was to deal with the inflation. They've got a 2% inflation target. That's actually their mandate. And now inflation is hitting double digits. So clearly something's gone wrong. And I think there is an argument to suggest that rates should have probably gone up slightly sooner.
All right, still in the UK, inflation is a front-burner issue in the leadership tussle in the ruling Tory party. Former UK Finance Minister Rishi Sunak, who's gunning to replace Boris Johnson as Prime Minister, has said inflation should be the UK's #1 priority. He's squaring off against Liz Truss for the leadership of the party and the country. Inflation is also a major talking point around the world. Turkey in Europe, Zimbabwe in Southern Africa, Argentina, South America, also notable examples. So what about here in Nigeria? Joining us to discuss further, we're very happy to have the Managing Director and CEO of Financial Derivatives Company Limited, Mr. Bismarck Rewane. Good morning, sir. Thank you so much for joining us. So do you think, looking at the other examples, do you think Nigeria is, in your opinion, prioritizing inflation?
Sure.
Yeah.
If not, you wouldn't have had a move of 250 basis points in 2 meetings after 70 months of not moving the policy rate upwards.
Okay.
So that tells you, 1, the importance, 2, the magnitude, and 3, maybe to some extent an overreaction in terms of what it is. But coming back to what the global trend is, I think one thing is important. There are structural inflationary causative factors.
Yes.
Contemporary factors, that is current factors. And there are times when people just kind of misconstrue structural for current and current for structural. But what is clear is that you've had in the US a 41-year high, in the European Union the same thing, and everywhere. So inflation is what we say, inflation here, inflation there, inflation everywhere.
Yeah.
However, one thing you must understand is that inflation is now likely to be tapering in the United States.
Okay.
The price of gasoline is now down to $4 a gallon from $5. That's 20% off. The price of grain has actually come down now that we're lifting some grains from Ukraine. So those exogenous factors that actually drove inflation, if they begin to reverse themselves, combined with the astronomical increase in interest rates, the US has done significantly, and even the UK is going to do that.
Yeah.
Every other person is doing that. You'll find that there's a lag between when those things happen and the transmission effect into domestic economies. I think we must bear that in mind. And also, more importantly, is the fact that inflation expectations are more significant to consumer behavior than historical inflation.
Okay, thank you for that. I wanted to ask, there's some arguments that the inflation figures we have here in Nigeria, year-on-year 18.6, food inflation 20, don't really reflect the price increases that individuals are seeing on the ground. What's your take on that?
Okay, there are 2 things here. One, there's a question of data integrity, which Nigeria has not been known to be a unique example of integrity, not only in data, but in every other thing. So we have our reputation, which lives ahead of us in so many respects. So that's 1. 2 is the fact that the inflation basket is supposed to be reconstituted every 5 years. Naturally, your behavioral patterns, your demography, in fact, your life expectancy and all of that.
Yeah.
So the last time changes over time. Therefore, you need to reflect that in terms of changing your consumer basket.
Okay.
Even if it's just tweaking it a little bit. But the last time we did that was 2009. So quite frankly, going by the 5-year cycle, we are due for a 3rd review, but we haven't done anything about it. So what we sought to do at Financial Derivatives was to look at the basket as it was constituted in 2009 and try to rudimentarily just alter the basket.
Yeah.
Crude alteration, but it's better than nothing.
Yeah.
And when we use the basket, right, of the NBS, it came out at 18.6. By the way, our projection is that it's going to come out at 19 point something using that. But then when we try to reconstitute it, it showed about 45.64.
Oh, wow.
Yeah, so big difference. That's one. Two, then we went further, because that's even using their own basket. We went further to do what we call a synthetic basket. The synthetic basket now tells us something much more frightening, which came out about 84%.
Good Lord.
But again, you're comparing the price of a product last year with the price of a product this year.
Right.
What is more important is that even using their own basket and using the monthly inflation, because if you're looking at the price of a bag of rice last month and this month is more reflective of reality.
Right.
So that annualized, the monthly inflation annualized comes in at about 24.
Gotcha.
But fundamentally, we need to look at inflation.
Yes.
What does it mean? It means different strokes for different folks, like we say. And I listened to your conversation with nairametrics and all of that. And with all due respect, it was incomplete.
Okay.
All right. Yes, you confined it to the fact that if output of goods increased by a certain amount and money supply increased by a certain amount, then the difference would give you your rate of inflation. Yes, to some extent, true.
Okay.
But what you did not take into consideration was that there's the inflation interest rate differential.
Okay.
If you maintain artificially low interest rates, then that hypothesis will stand.
Work. Okay.
Therefore, but if your interest rates, remember during the Soludo days, inflation was 15%, interest rates were 17%, bingo, the Naira actually appreciated.
Yes.
Right?
Yes.
And we had excess crude account at $66 billion. We had external reserves at about 40-something billion debt. That was the Goldilocks days for Nigeria.
Yes.
Now, followed by the Sanusi era, and then we have this. Now, what we see now is that we did our own regression and tried to simulate the causative factors into independent and dependent variables. And what did we find? We found out something quite interesting. That 76% of the inflation today is as a result of exchange rate pass-through.
Oh, wow. Okay.
I think 11%, if I'm right, 11% was because of diesel, and only about 3 or 4 or 5% was a result of money supply saturation. Now, so what does it tell you? What causes, is it exchange rate depreciation that causes inflation? Or is it inflation that causes right? So if you flip the variables, you may get a different type of outcome. But it's interesting to know that even those who have no import content will tell you that the reason why the dollar is, and all that. So it becomes, inflation psychology is different from expected inflation.
Okay.
Inflation psychology it becomes a self-fulfilling prophecy where you now begin to believe. So what does inflation mean to a multinational? It says, okay, I'm going to take my dividend out because as inflation is going and interest rates are not catching up, then it's a different thing.
Yeah.
So I now need to front load my dividend. So you find companies that were doing annual dividends are now doing interim. And why? Because they believe in 6 months, the exchange rate would have moved against them. Therefore, take whatever you can
now
and take it out now.
Right.
So you see a company was doing 1 Naira dividend before, it's now doing 7 or 8 Naira. Even plowing into reserves, raiding the reserves to pay out. Why? Because they believe that the currency as a store of value has lost its direction.
Wow.
So how do you now?
How do we bring it down?
How do you deal with this?
Yeah.
I've read many things, and I heard your last speaker talking about the central bank doing this and controlling an EFCC running after people. See, let's not deceive ourselves.
Right.
Right? You don't need. I don't know any country where you use policemen to be run after currency dealers. No, it's not. It's so
archaic.
It's so native. No.
Yeah.
It's primitive. That's primitive economics.
Yeah.
So the markets work. The markets work.
Yeah.
Allow the markets. If the exchange rate is in equilibrium, or you have a program towards it, people will then have confidence. It's predictable. Zimbabwe has an inflation rate of 250%, Turkey has 80%.
Yeah.
And so there are different ways of dealing with inflation. But the first thing to understand is what are the causative factors, and let's try and reverse them. Even if you cannot reverse them, try and neutralize it. Why? When you look at the exchange rate, what is fair value?
Yeah.
Then you add the fear premium, and then you add speculation. One can easily argue that today, the parallel market, you would say it's now basically is about 670 naira this morning.
Yeah.
It had come down to 645, right? Then it started running away again. Why? Some people brought in $8 million, sold it, then the EFCC came. After 2 days, everybody runs away.
Right.
And the market begins to find its true value. So the INE window rate is 428.
425, yeah, for about around that, 430.
Okay, so there's 200 to 300 naira there.
Yeah.
Even the Pope will be lured to
the parallel market.
because this is speculator's paradise.
Right.
So what you need to do is just try to converge. Try and have a program towards convergence. Increase the supply, converge. So every dollar you sell takes away naira liquidity out of the system.
Right.
One. Two, there's no point moving your policy rate to 14% and leaving your treasury rate at 4%. It doesn't make sense. Nobody saves money at the policy rate. People save money at the treasury rate and the other rates. So the interest rate structure is divorced from reality. It's an alternative universe. Whilst the policy rate, which is anchoring expectations, is divorced from the markets. So what you need to do is to bring market reality and accept market reality. There's no point deceiving yourself about it.
Fantastic. I want to take a quick break, so I want to continue this conversation with
My
you.
pleasure.
Please stand with us. You're watching the Global Business Report here on Horizons. We'll continue this special conversation on inflation after the break. Stay tuned. Welcome back to the Global Business Report here on Horizon News. We continue our special discussion with renowned economist Bismarck Rewane, Managing Director, CEO of Financial Derivatives Company Limited, on inflation. So right before we went to the break, you mentioned Treasury bill rates and inflation. So I want to play a clip from only Sunday, a special report that was done on the foreign exchange where you were one of the speakers. Let's play what you said about investment returns and inflation.
You cannot have inflation rate at about 19%, and you have your Treasury rates at about 4%. Whilst in the United States, Kenya, in Ghana, and South Africa, the policy rate, the difference between the policy rate and the market rates is less than 1%. Yours is a negative about 8%. And that is what is leading to capital flight. And that's what leading people have no confidence because they can see that there's confusion in the minds of policymakers.
So yes, I'm glad you preempted that already. So
Yes.
what does an investor or a saver do when you have inflation that high and your real rate of return is negative?
That's a recipe for capital flight, like you said earlier.
Yeah.
And it's a recipe for chaos. People say, look, I'd rather go and buy Bitcoin. And you lose your shot there.
Right.
You buy things and you take unnecessary risks. So the thing to do is to let there be some stability and let there be understanding. Policymakers should understand they are not policies are not about transactions. Policy is about altering people's behavior, engendering confidence.
Yes.
That this currency is a store of value, and that policymakers are quite clear. There's clarity in the minds of what we have to do.
Right.
So we will adopt the crawling peg policy for moving our official rate. We will put enough supply into the foreign exchange market to allow that, the gyrations to reduce, the volatility to reduce, and we'll be clear that if we increase interest rates, the structure of interest rates, and thereby increase the marginal propensity to save, then we automatically reduce the marginal propensity to consume, because two components of income, you either save or you consume.
Right.
So once we increase the savings, we reduce the consumption. If we reduce aggregate consumption, the demand for goods and services will decline in the short term, and that will bring prices down. While at the same time, output, because we have increased savings,
Yes.
investments will increase.
Right.
The investment multiplier means that output will increase. So the goods you are referring to in nairametrics, output will increase, and money supply will decline.
down. Okay,
And
okay.
that's the fundamental answer to it. It is there's nothing. It's not a rocket science. First and foremost, you have to believe in market economics. You cannot be a voodoo economist as well as a market economist. You can't go to your marabout and go to your medical doctor. You can't go to both.
Right. You have to pick one.
Absolutely.
I'm glad that you mentioned money supply. Do you think the central bank is walking a tightrope between trying to support different sectors of the economy with intervention funds, and at the same time, the money supply impact on, I guess, inflation?
The reason why in economics we differentiate between fiscal policy and monetary policy. Monetary policy is about creating monetary stability, right?
Yeah.
To complement fiscal policy, which is about revenue, growth,
Yes.
and taxes.
Yes.
So those who are in charge of fiscal policy should focus on fiscal policy. One of the biggest problems, in fact, South Africa last week
Yes.
came up with and clearly said the mandate of the Central Bank of South African Reserve Bank should be confined to what it has always been, the traditional role, maintaining price stability. Central Bank is the bank of the federal government, bank of the government, and bank of the banks. Then maintain price stability. The fiscal authorities, the Ministry of Finance, Ministry of Investment, and all that, are supposed to be doing those things. The development finance activities of the central bank are welcome, but they should be tangential. They should be fringe activities. There's a bank of agriculture. There's a development bank. There's a bank of industry. Those guys should focus on those things. We cannot all run to the central bank. We want PTA, we go to the central bank. We want this. Come on, please.
Right.
Even if they are superhuman, they will collapse under the pressure of being all things to all men.
Gotcha.
So when we focus on what we have to do and reduce the amount of regulatory trespass, right? Then focus is a generic strategy that has been known to work. I am confident in the last 2-3 meetings, we've seen the central bank, one, move interest rates in the right direction, two, saying the right things, three, they are beginning to reduce what they call the unorthodox monetary policy,
Right.
because I don't see the impact. So when you have that, when there's that clarity precedes certainty. Certainty precedes the build-up in confidence. Once confidence is there, investment increases. So it's a path to macroeconomic success. But if you go the reverse path, then you have yourself to blame, especially in the heat of a political debate, which nobody knows what's going to happen.
Right.
So it's all the lack of clarity, political lack of clarity, and the imponderables, the things that we do not know that will happen, what you don't know, when the unknown unknowns become more than the known unknowns, there's investment paralysis. So we need to focus on those things that we can control, and rather than chasing pies in the sky.
Gotcha.
That's critical.
Very critical. I'm glad you kind of mentioned policies. We don't have to mention any names, but as far as the top candidates running, do you think they should be prioritizing inflation, or as far as the economic issues plaguing the country, should that be on top of the agenda? Using a Rishi Sunak, for example, now.
I understand. Sunak is running for the leadership of a political party, so that's.
Right.
But when you're going for the mandate of the people,
Yeah.
you have to look at what economics is all about.
Yeah.
Because good economic policy will lead to good political outcomes in the long run.
Okay.
But good economic policy in the short run could be unpalatable. But when all bets are off, when the wheels have come off, right, then you have no choice but to do that which you have to do. I believe that no matter who wins this election, from what I've seen, so far. Everybody's saying the right thing, but talk is cheap.
Right.
We were there before. Everybody said the right things and ended up doing nothing. Or when we did something, we did the wrong thing. So that's that. To me, it's quite clear that no matter what happens, we need to open up this economy. We need to get away from these homegrown solutions which don't work. And we have to accept the reality that markets work.
Right.
Every time we've embraced the markets, we've succeeded.
Right.
I'm not talking about unbridled, just don't throw your economy away.
Right.
But you must have a plan. You must have a deliberate plan. And you cannot do it by yourself alone. You need the cooperation of the international financial community. You need the cooperation of this. It's shameful. It's the Russian foreign minister came to Africa and went to 4 countries last week. The Secretary of State of the United States is in South Africa and is going to. Come on, the biggest economy in Africa has been ignored, or forgotten, or lost. So, it's food for thought. It's food for thought. Where the hell are we?
Got you.
So we are. Are we that? Are we too big, or have we become too small?
Got you. Minute to go. I just want to get to close out your inflation outlook for the country. I guess maybe half year into 2023. How do you see things playing out?
I think that we have no choice but to move our interest rates higher, because I think the Minister of Finance said there's an attempt to securitize the ways and means.
Yes.
The federal government borrowing from the central bank has got beyond, it's close to break point. Therefore, if we move those interest, if we put those instruments in the market, right, it will automatically move interest rates up. We can't be shy of that. You can't make omelette without breaking eggs.
Right.
So once you move those interest rates up, it will have a downside. First of all, it will help strengthen the currency, and at the same simultaneously increase the supply of foreign exchange to the foreign exchange market. Don't ask me where you get the money from, but we'll get it somehow. Right. If you have to borrow. If you have to, but you have to put it there. That way, you bring some interim stability. Then we go back to the mechanism for determining our exchange rate. If we do that right, and we have an interest rate structure which is reflective of markets, and there's that, what I call dynamic equilibrium rather than static or partial equilibrium.
Yeah.
Our audience will not understand this, but it's important. What I'm saying to the audience is that you can't hold one thing constant and the others will move in.
Right.
You have to simulate all the other things moving at the same time. And then you are likely to achieve a reduction in inflation, because imported inflation will reduce, your exchange rate pass-through will reduce, your marginal propensity to save will increase, your investments will increase, and over time, in the next year or two, you'll find inflation begin to taper, right? Then at the same time, reconstitute your basket. So I don't think that we are in, we are a lost cause.
Right.
I think that there are some flickers of hope in this big dark tunnel, but
It's always fantastic having you on the show. So, MD, CEO, Financial Derivatives Company Limited, Mr. Bismarck Rewane, thank you so much for joining us.
Thank you for having me.
Thank you.
Pleasure.